Hello, guys. This is Sunday, and the market is going to be opening this night, like midnight this time, this midnight today, right? And when the market opens, that's when we'll be seeing our other trades, like the ones we took on currencies, because that's when the currencies open. Okay, so but before that happens, I'm just going to basically what I'm going to do today is I'm going to share my insights on what I think the market is going to do on all these other currency pairs. Okay, but BTC has been trading throughout the weekend as as it always does, right? So I'm just going to share my analysis on Bitcoin. You know, I'm actually looking to take. I actually took this trade. Like I'm on this trade right now, but we're still in drawdown. Okay, because Bitcoin is just. I'm not really comfortable trading Bitcoin because the way it moves, it moves really crazy. Bitcoin could just ignore all of these demand zones and just keep going higher. Okay, so but I'm on this trade regardless, and I want to share. I think I did a little bit of the analysis yesterday, but I'm just going to continue. So, number one, Bitcoin has been trading higher for a while from the bottom, you know. So, if you're going to go with market structure, we can say it's on a bullish trend, right? So, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Until price created, until price created this high here. Okay, created this high, and then when it created this high, it's like it did this. Okay, I have my it did this, this until it created this high, came down, failed to break below the low, came up, attempted the high, but it couldn't, touch the high. It couldn't break through the high, so it came down a bit before finally shooting up. Right. So we have we have a demand zone here, like this entire area where price flipped is a demand, and it's a potential target for price when price starts coming down. Okay. So we have that one. So when price now moved up, price kept, creating higher highs. It's played a little bit around here, little sideways movement, but we can still consider that to be a demand because price is going to react from this area. Because what this just means is price tried to break the level, but it couldn't at first. So it had to pull back and then shoot up. So momentum still kicked in here, making that area a demand area. So we have two demand areas now. All this time, price had not made any significant, it had not started pulling back after it broke this high. Okay. And we don't have enough data at the past to look at. Let me just clear all of this. So this is the weekly chart. On the weekly though, we have price. We have price take out. Let me remove this. Let me zoom out so y'all can see. Okay. If you look at these candles, the way these candles were forming, same thing happened here. From when price broke the structure, it came downward. Okay. But it first attempted to break the structure here. It came down, failed to break the structure. It went up, created this high before breaking down below. All right. So we have this entire area marked out as our liquidity. So price has to clear that high. Price has to clear this high without violating this high for the structure to be maintained. So that's why price has been going higher all this while. Right. So this is the overall high. Price is not going to clear this high if the bearish structure is going to continue. Or price has to take out this high. So that's why even when price came to this point, it came to this point. It couldn't break it because it has to react off. What's it called now? Oh, let's stop this then. It has to react off supply. And that was what it did. Reacted off supply. So reacted off supply here. And that's why you have this reaction. But it was not strong enough. It was not strong enough. So price had to break out, upward into this demand. So that's what price has been doing all this while. And there's also a mini liquidity zone here. Here, this high. This is also a high. Price has to take out that high. Okay, so all this liquidity has been swept, and that's why we started seeing reactions from the market. Okay, so there's seeing reactions here. So I came with my charger. Just gonna So let's see reactions here. See, price started reacting. All this while it was not reacting until the moment it swept liquidity, started reacting. Okay, and then we saw the first push downward. All right, it was a bearish engulfing candle, which I talked about in our previous streams. Price pushed downward, retraced, and it has been failing to create a higher high. Usually, if it was like it did here, it pulled down and then it shot up immediately. But price has been failing to do that. So what we are trying to do is just analyze that area to see where we can catch some of the moves, because you see all these demand zones, price has to come into them to react off if price is going to continue upward. All right, so that's what we are trying to track. Okay, so what will happen is price could do this. Price could pull back into this area, break this low, tap into demand, go up, tap into supply, come down, tap into demand. But definitely has to react off demand. It has to bounce off demand to go upward. Okay. But just because we know where we are on the weekly, and we can see price has broken structure. So price has to come back down to take out this entire structure. At least take out this high, tap into demand, and then shoot upward. Okay. So maybe expecting price to come down to at least 75,000. This is not like this is just my analysis. I'm not making any market speculations for people to follow or something. This is just my analysis, and this is what I'll be trading. Expecting price to come back down into this area. So let's go down to the H4, to where price is. So we now saw all of this happen. Price has printed its first, bearish move, and on the H4, you can see price change structure by clearing. Let me see. Hold on. Coming. Where's this? Where's this? Where's this? Okay. Price has broken structure by clearing this low. Took out all these lows. Initially it was all bullish until it broke, taking out these lows. Right? So that's a change of character. That's price changing to bearish. And then when it did that, what was it supposed to do? It broke up, pulled back. And it's supposed to come back down to maintain the bearish move, but it has been failing to do so. Okay. But in as much as it has been failing to do so, it has been breaking lows and maintaining highs. So we keep seeing something like this being formed in the market. But you see, price has just been playing inside, right? And it has been failing to break this low, rejected off this. But it has also basically what it has been doing is just um, react off support, demand rather. It has been reacting off demand, and price went up, but it has been creating lower lows, lower highs rather. So we're expecting price to keep doing this until a point where it pushes down. All right. So when price comes down to tap into this demand, I'm going to get out of this trade and wait for the pullback to target the next trade. I might even take a buy from this point, because this is the H4 and every move here is significant. This move is it's going to be around 400 pips, 400 ticks. This is okay, 390 ticks. All right. So that's what we're looking to catch. So what I did was anticipated, since price had printed this lower high, created this, went up, failed to take this high. So we can still say this is also another weak high, right? And every weak high, sorry, this was a strong high, right? Because it failed to price fails to push upward to break this point. So we're basically looking for strong highs. And so far we've not had any strong high. This was the last strong high we had because it broke this low, right? This is now a strong low. This is neither a strong low nor a strong high because it has failed to break this high. So this is what I mean. In a bullish structure like this, because this low broke this high to create this high, this low broke this high, we say this is a strong low and this is a weak high. Anything that has been broken is weak. Anything that breaks is strong. So we have strong lows breaking weak highs, strong lows breaking weak highs. But at this point where the market is like this and it has not broken this high yet, we can't say this low is strong yet, right? Because price might do this. Price might do this. And in this case, we say this high is no longer a weak high. It's now a strong high because it broke this low, and this low now becomes a weak low because it was broken to create another low, right? And this low, because this low could not come all the way up to break this high, it ended here. We say this low is weak, and it created this strong high because this strong high broke this low. So that's what I'm trying to say. You know, that's what I'm trying to say here. We are looking for strong highs that are going to break this low. And the moment we find a strong high that breaks, the moment price breaks this low, the high from which price pushed down from becomes a strong high, right? So that's what we're expecting. That's just what we're expecting. And we can't really find much on the higher time frames, although we know where we are, but we have to go lower to lower time frames. And then when you go to the lower time frame, we saw the structure forming, bullish structure, higher high, higher low, higher high, because this high is higher than this high, slightly higher. But then price broke, price broke downward. And then we have another break of structure here, making this a strong high. This strong high broke below this weak low to create a lower low. So see structure started shifting bearish. Now see the tricky thing price did. It went up from here, created a lower high. Like we said, in a bearish market, it's supposed to be forming lower lows and lower highs and lower lows and lower highs. But then from this point, price failed to break below this low. Instead, price tested this area, and then went up. So I was anticipating. I saw this area as liquidity because price has to take this out, and then tap into supply at the top. And the funny thing was, I actually took a trade here and lost that trade. I actually closed it out when I realized what price was doing. So I closed this out and anticipated price to come into this supply. So this supply, you can see this supply on the 30 minutes. Yeah, this is it on the 30 minutes. That's where you find it. Okay, if you look here, see this momentum candle that pushed downward, right? You see the candle before it, which is this, it's a supply zone. But then again, liquidity. Like price always looks for liquidity. It swept this liquidity at first. It came back up to sweep this one. Sweep this one. So if you look at this carefully, let me zoom in at this point. Put a line at the top of directly on top of the wick. Okay. And then we'll scroll to the left, to the right. You're going to see that price swept that point. All right. So that's liquidity being swept again. Okay. So what we're expecting from that point, we're expecting that, we're anticipating that price has had enough fill to now come down. Okay. So that's the trade I'm on. And currently I'm down $7 on a 0.09. 0.09. I'm down $7. So we're beginning to come into profit. Initially I was down $27, but we're beginning to like close that gap gradually. So if this trade holds, I'm anticipating price to break below this level. Let me go up to the H4. I'm expecting price to break above this. Where am I? Okay. break. First off, it's going to break this level one. When it does that, it's going to break below. Uh, it's not going to break below this one, right? So every time it breaks this structure, it's going to pull back into some form of supply. Breaks the next structure, pull back, breaks the next structure. But overall, this is our target, this level, because price created this high, created this low, and failed to take out this high. So you're anticipating price to come down to break below. Just because the move is probably going to be really drastic, they need enough liquidity, opposing liquidity, to push price downward. So that's what price has been searching for all this while on Bitcoin. Okay, so that's my anticipation, and that's what I'll be looking at. Right, so that's for Bitcoin. So this will be playing out within the next couple of days. Let's say within before the end of this week. This week we're going into. Okay, so that's what we'll be seeing on Bitcoin. That's what I'm anticipating. Let me change my language. So I'm just going to pin this down, block this in, and if once price comes to this point, it's going to bounce up again to seek what supply, whatever supply will be formed around here as prices beginning to go down, is going to seek supply and eventually go lower. So these are two trade setups I'm looking at. Once price comes here, I'm going to take a buy, especially when I see the market start shifting bullish. So the moment I see structure in the smaller time frames, I'm going to take the buy up to supply, wherever supply will be. And then when price comes into supply, I'm going to take my next sell, stop loss above this high, down um to the new demand, the lower demand, which is this one. There are actually two demand zones here. One is this entire range. This entire range. Ideally, so if you're refining it, this is going to be your demand, right? But I'm going to treat, just because I'm trying to get my take profit, I'm going to treat this entire range as my demand, from this high to this low, this flip zone. Price from bearish flipped bullish. So I'm going to treat that as a demand zone. But a more refined demand zone is going to be this, right? But price is definitely going to react off here, because one, if you look here, you're still seeing of this candle. All right, so you're seeing this zone and it's directly on top of the line. So price might just do this, come to this point, react off it, will eventually drop down into this demand here. So this will be my this is my outlook for Bitcoin within the coming week. Coming, let's say the coming month, this will be my outlook. And I'll just be finding trades in between all this price action. So that's Bitcoin. And so since the market will be opening today, I'm going to touch some currencies. I actually had I was trading. I had some trades open here in AUD, USD, CHF, JPY, and gold. So I'll just analyze those pairs. I'm just going to go to GBPUSD. Okay. So first things first, start from the higher time frame. Higher time frames. This is the monthly. Wow, this is so cluttered. Jeez. Let me just clear this out. This was from my first damn. Oh, that's the monthly. That's why. Um, so cluttered. I think I should just leave this pair because I don't want to waste time. And I'll touch this pair in the evening before the market opens. So I'm just going to go down to Euro USD. Okay. And let's go back to the monthly and see what price is doing, or what price has been up to. So yeah, we have this structure: higher, high, higher, low, higher, high, higher, low, higher, and then price failed to take out the previous high, and then it breaks below. So this was the start of a bullish trend from this bottom, start of a bullish market trend. Okay, because from here price is supposed to go up to take out this high, right? And initially maybe it was because it had not tapped into demand here. Maybe it was because it had not tapped into demand here at this point. That's why price failed to break below, like to break above this high. But then eventually price went up, took out liquidity and dropped into this demand zone and still failed to take out the overall high. So price started shifting bearish from this point, you know, went down. Okay. So if you look at this, if you look at this point, printed, price printed this low, right? Failed to take out the low here. Eventually went up and came down from this point to take out the low. So this point is a point of interest. I'm just going to highlight this area. It's called a point of interest because I mean that's an area we're interested in. So whenever price comes down to that area, comes up to that area, we want to be there in the market. Okay, analyzing to see what's going to happen. This is a very wide range supply area because this was where price gathered momentum to come downward to break this overall all these lows, right? So when price came down, price kept doing this lower highs, lower lows, bearish structure. Did the same thing here, failed to take out this low, right? Failed to take out this low here. Went up, gathered momentum to come down to take out the low. So we're also going to mark this point. And you see this thing that happened here is the same thing that happened here. So this whole area is also a point of interest, right? Just going to look for the exact candle with which price. Because if you look at this now, let's go in. Oops. If you go in, you see price was forming higher highs, higher lows, higher highs, higher lows until eventually it flipped. You know, it failed to take out the high, came down and broke the low. So this is another point of interest. And this is on the monthly, but I'm going to refine it to a single candle, you know, to have a more refined monthly candle supply. So what we're expecting is that price is going to pull up to this area, right? And then when price pulls up to that area, we're going to start looking for shorts. So what did price do in the past? Price created this high, came down, failed to take out this low. So from this high, it went up to break what? Break structure again. So we have this structure broken here. We have the structure broken here, right? So we're expecting price to pull up, tap into supply, and come down to break this structure. Okay. So this is our target. So even if you're taking sales from here, we can target this point, or we'll come down below to target some form of demand down here. But this is our first target, our primary target. So now what is price doing? This is still on the monthly. So every candle here took a month, and you can tell how long that was. So this whole push took about 4 to 5 months to happen. This one, right? So we're expecting price to come to this point around maybe within the next 4 to 5 months as well. So when price did this, okay, when price did this, printed this low, price had not tapped into demand because there's a demand zone here. Price had not tapped into demand. The candle before the previous candle on the monthly time frame. I'm just doing this analysis strictly on the monthly time frame. So it is anticipated that price is going to have to come down and tap into demand before going up into supply. And this is just because this whole area looks like an inducement. It looks like we are trying to just induce people into taking buys, you know, creating a false break. So when you see price do this, you think price has tapped into liquidity. The price is supposed to be going up, which is very, very possible, which was what actually happened. Cleared liquidity and went up to break the high. But when price breaks structure, what are you expecting? You're expecting price to pull back. And when price pulls back, you have to look to your right to see if you have structures with which you can base your liquidity on. So when you have this, I've explained this so many times. When you have this, price creates a high, creates a low, creates another high, but fails to take out this high, it now has to come back down to tap into to generate enough momentum to push upward. Your liquidity is going to be found around here. This is your supply. This is your demand, right? But price has to clear this low because there's opposing liquidity below this point. Clear this low while protecting this high. So this low is not going to be touched. Price is just going to clear this other low and then go up, right? But in this case, this is what we have. We have a high, a low, let's say an equal high, a lower high, a lower low, and then price shot up immediately. So what's price going to do? Where are you going to find liquidity? You're going to find liquidity below this low because there's no structure to the left. Like throughout this whole push, it was just a single push to the top. There's no structure, so price is going to have to come down, clear this low before going up. And when it clears this low, it's going to go down into demand. So that's what we're expecting price to do here. Price is going to have to clear this low, tap into demand before going up, right? So the pullback has already started because each candle took a month, and we have 12 days for this candle to close. So when we keep going down to the lower time frame, what we want to see is bearish structure. We just want to identify the bearish structures and position ourselves for that sell. And you can see price pulled back down, but is reacting off this big supply zone, big demand zone rather. And this is just from the top of this point to this point. So it's a flip zone. This basically is this is what it looks like. Created a high, created a low, pushed upward. We'll call this a flip zone. And that's what we have here. High, low, high. All right. This is a flip zone. If you go lower, we're going to see have more details for that. All right. We can even refine it down to this candle, the candle before the momentum candle. That's for the daily. And you can see price tapped into it neatly and then it's pushing upward. So from the daily, we begin to see the bearish structure we've been looking for, right? So let's now analyze what price did, what price has been doing. Price created high, low, higher, higher low, right? At this point, it's a higher low. So we're expecting price to go up and break above, but price failed to do that. Price created this high, lower high, and then broke below this previous low. Okay, so when we see that, we know structure has shifted. Because this is the daily. So each candle on the daily is actually very dense with information. So I'm going to just clear everything. So what are we expecting price to do? Once it breaks the structure, we're expecting a pullback, right? And price pulled back and eventually broke this low, this overall low, which is the most significant low. Because this is the swing low, while this one on top is the swing high. Right? Swing high, swing low. So this once price broke the structure, that's when we say price has changed bearish. So all of this was just internal bearish um structure that was forming internal. This is the major structure that was broken. So when price breaks this, taps into demand, we now expect price to go upward. All right. But now where are we targeting? We're targeting an area that price took momentum from before coming downward. So the first area we have is this. This is like the most extreme level. This is most extreme. We also have this one here. Also have this one. Okay, but I strongly doubt. I think this one is. I think price is going to sweep this high, maybe even sweep this high before coming downward. But we just don't know. It just depends on what price shows us. So we'll keep going lower to get more ideas. Because you know what? So when price created this low, came up, created this low, went up, created this low, right? Price had not swept liquidity in any of these areas. It has not. It had not. So we're just going to draw out our supply and demand zones along this area. The first supply was this. First supply was this high, slow, right? Price shut down, but price tapped into it with this other candle. So the next supply is now here, flip zone. Okay, this is our next supply. So we can see we have a common high here. That price is very likely to sweep, like price is very likely to sweep all of these highs. Um, Let me just bring this down. Very likely to sweep all these highs and tap into this area. So that this is what we are. This is a new target for this internal range demand, internal swings, internal bullish structure that is about to be formed. So far, price has created this failed to take out this high and it's coming down to tap into some form of demand and then push upward. Okay, so I'm going to mark out this demand zone. So this demand zone is now price left created this demand, right? So it's expected that price is going to pull back into it and go from there. But the minor demand I'm seeing, a really, really, really minor demand, and price is reacting off that one for now. So let me show you. It's a flip zone from the top of this candle to the base of this other candle. Pull it back to the future. See price tapped into it neatly. All right. Let me refine it some more. Price taps into it and is reacting off it. Okay. But this is just for now. I guess price is just going upward to tap into some supply. Okay. But now let's keep going lower. Let's keep analyzing this area. Price created this low, created this high, failed to break the low, went up and eventually broke the low. Right. So where are we expecting price to come up to? First of all, there's this supply. There's this supply, right? That was created. But we need liquidity. We need to tap into liquidity to come down. So my best guess is this point is our point. These are liquidity. Expecting price to take out this area, take out this price, this level. Okay. So what we are seeing here is that price is going to come up to this area, right? And then if we go lower, so maybe we just want to catch a quick buy from this point to this point. Let me see how big it is. This is basically 94 pips. So we can just go lower to find an entry. Go to the H1 M30. On the M30 now, you're seeing something similar. Price created this high. Basically, yeah, price reacted off this from this base to this top. Price reacted off it here. Okay. And then eventually it failed. Right? Price was supposed to, from here, price was supposed to come down lower, but price failed to create any significant loss. So it just went up. All right. So we can say we have a bullish structure here because we have from this low, we have this high, we have this low, we have this high, we have this low. So price is going upward, right? So when price broke this structure, it broke the structure with one clean sweep from here all the way to this point, and it has not come back to take out this area, right? But this is the M30. So price just reacted off another demand that was created here. Reacted off it. So you can see the base of this candle to the base of this, to the top of this candle to the base of this candle. Can even refine it to this level. So this flip zone, price is reacting off it to shoot upward. Okay. So we are seeing enough momentum on this candle. So this makes this previous candle, an area of demand. But liquidity should always be at the back of our mind. So my best guess is price is going to come down, take out this low, right? Tap into demand before eventually going upward. So I don't know what demand is going to tap into. It might be price might just take out this low. So instead of taking your order from here and putting your stop loss below this low, right? Put your stop loss below this low and take your order here when the market opens. Okay, and then target the overall high, the overall liquidity, which is this. The safest point to target is this supply, but just because we know where price is headed, right? Price is definitely going to react off this point. It's going to come to this point, react, and go up. So you can close your order when price comes to this supply zone, and then wait for the next wait for the pullback and wait for the next entry to the liquidity zone, liquidity area. All right. So these are the trade ideas for the coming week on EU. I think I'll just take a screenshot of this and post it in the WhatsApp channel for those of you who there. Right, so price is going to do this, and then this is the first trade idea. The second trade idea is when price comes up to this point, right, we're going to take a sell. Now, where are we going to take the sell from? Our stop loss is definitely going to be above this high. Okay, but we have this really fine supply at this top, from the top of this week to the bottom of, I know you guys can see it, stretch it to the future. So this is what I'm talking about. This area, right? So I'm going to move my order up to that point and my stop loss above. So this is going to be the second trade I'll be anticipating. And my take profit is going to be here. And why is that? Why am I targeting, deep into the level? Because one, price shot up from here, right? Let me go up to the H4. Price went up from here, right? Created a new low that failed to, like this new low so far, price has not come down into, like we have all of these areas that price is supposed to come down to. Okay. Price is already in the discount zone, right? Price is already in the discount zone, but I feel like this demand zone is too broad for price to just go up from. So price might just come down because like this is the H4. Price might come down like this. Let me see what this daily looks like. Okay. Mind you, we are targeting this area overall. Okay, so this is the daily chart. But when you come down to the H4, you're seeing this demand here. Seeing this demand here. Okay, so price might be coming down here. And just cause just cause at this point price has not taken out this high yet. So if price taps into liquidity here and comes down, if this trade becomes a winner, price is going to come down to tap into demand and eventually maybe go up to this point. So that's why I'm targeting this area. But price might still shoot all the way to the bottom like this, So this is a very high probability outcome. But for now, we're just watching. And then when price comes down here, that's when we'll start looking for buys to target these liquidity zones. Okay. So these are the two trade ideas I have for the week. One, a short buy to this area, and then a sell, and then a buy. I'm just saying, we'll actually have to look for confirmations when price starts, pulling into these areas. All right. So this is not even going to be. This is going to be a first reaction point, but price is most likely to break beyond and come up to this supply. Okay, lock. And then when price does this, what are we expecting price to now do? Start coming lower. Okay, because from the higher time frame we analyze, we have all these areas that price has not touched. But that's what we are going to be expecting from now to the end of the year. So these are just the trade ideas for the coming week. Okay. So um give me a minute. I'll be back. All right. So before we are 41 minutes into the stream. So before oh, this is nice. All right. So before I just hope all of you can hear me. What was this? I'm just gonna switch this off. Transmission. Switch back. All right. So before the market opens, let me just before we close rather, let me just quickly give you another analysis on oh my god, what's it going to be? GBP, JPY, GBPUSD. So let's start from the monthly. From the monthly, we have a bearish structure from here. Bearish, lower highs, lower lows, lower highs, lower lows, right? So this is a pullback, and we're anticipating a much lower low. Okay. Let me go all the way to the back to the past to see if there's any interesting. Price took out a low, an all-time low that was created far back in 1990, 1985. Wow. So price GBP USD is at an all-time low. Oh, makes sense because I mean, like you need way less um dollar to buy a pound. So basically, the pound is higher than the dollar right now. So I don't know what that's going to be like, but it's very possible that the pound will keep getting more expensive over the dollar. It's very likely. So this is where fundamentals come into trading. This is when you understanding market dynamics, overall economic dynamics of the world now gives you insights to what the market is doing at any point in time. Okay, so GBP USD, you're seeing we're pulling back into the swing, right? So this was the swing high, swing low. Price went up, created a lower high, which became a new swing high, created a swing low. So what is price going to do at this point? How far is it going to pull back, right? So we have this entire flip zone from this bottom to this top here. Boom, supply area. That's why price reacted from it. Once price got into it, it reacted. And when it reacted, what did it do? This is the monthly. It broke this low here. Broke this low. So when price broke this low, what do we expect? Another pullback into supply. I'm going to refine this to our new supply. Into supply. Okay. Let's zoom in. So this is our new supply zone. Price tapped into it. Okay. But obviously, This is very broad. It's a very broad supply. So when price, what are we targeting from this point? We're targeting just because we are still in a bearish market. If we take a trade from this point, we are targeting this previous low just to be safe, but not ignoring this demand zone. There's a demand zone here that is still fresh and has not been touched. Okay, has not been touched. So we could anticipate price to come down into this area, but that's way into the future because this is the monthly time frame. So let's say from now to the end of, from now to maybe mid next year, price might still not have gotten into this demand, right? So let's go down to the weekly. We're just trying to catch little swings in between. So when you look at this area, this point where price broke structure, this is where price broke structure, right? So this is the pullback. So this is the, see how, let's refine that as our supply zone, right? So price taps into it and started rejecting numerous times. Go to the daily. So let's see bearish structure. So let's refine our supply zone further for the refinement. Okay. Come back to the future. See how price kept reacting. You're seeing bearish structure. Low, high, low, high. This also started from turning bearish because it was still bullish. Higher, high, higher, low, higher, high. And then it failed to break, went up, failed to break, and then eventually broke here. So this thing it keeps happening over and over and over again. Keeps happening over and over again. Price failed to break below this low, came up, gathered momentum, and swung. Okay. So when price did this, what are you expecting? A pullback. How far is it going to pull back to? You're not going to have that information until you go, lower in time frame. What you're looking for is supply and liquidity grab. Looking for a price grabs liquidity. So let's readjust our breakout structure line. Okay, let's refine it to this BOS. Right, so this is H4. So every candle you see here is very, very significant. So this was the first point price broke. This is when price started changing structure. So this is a typical head and shoulder pattern. From here, created this left shoulder, created the head, created the right shoulder. All right, you can see. Okay, typical. So I'm just going to delete this because it's just a chart pattern. And if you don't understand what's going on, you're still going to get burned. So price cleared this area, right? And this is basically a change of character at this point because it has not broken structure. This was the overall structure price had to break, right? But it cleared this area and then it went up, started pulling back, eventually broke structure. So when price is pulling back, we're expecting price to tap into supply and take out liquidity. So when you look at this entire swing that broke structure, you're seeing this region here. All right. Two potential areas for liquidity to be grabbed is the high before the overall high. Price could sweep that entire area. Let me see what this is. Price could sweep this entire area and start coming down. So we have an extreme liquidity zone here. This is the extreme liquidity sweep. Lock that in. Okay. So far, what we are seeing, because it's a break of structure, we're expecting pullbacks, and pullbacks are basically change of character or break of structure in a much smaller time frame. So we can see price broke the structure. Price has to pull back into demand. There are numerous demands around here. Numerous. So what we want to do first is to identify the discount zones. Right? So we have a discount zone from this midline downward. Let me remove this. I don't need this. I don't need this. These are discount zone from this point. So we're not expecting price to buy from this top. We're expecting price to start buying once it has tapped into a discount zone. And when you look inside the discount zone, you're seeing our first supply, our first demand here. Okay, this is our first demand. So it's our first reaction point. And price has not tapped into it yet. Okay, so we have that. We also have this one at the base here, extreme demand at the base. Well, let me just tag the whole. Okay, let me just use this. Extreme demand at the base. two demand zones that is waiting to be filled. Okay. So we might get a reaction off this demand when price comes into it. Might get a reaction like this, taps into demand, reacts, takes out this overall high. Sorry, takes out this high without clearing this high. So it's still going to be maintaining structure and then tap into this demand before going up like this. So this is a possibility, right? So we're on the H4. So what we are looking at when the market opens is, you see price has changed character. It's changed character by clearing all these lows. So we're just basically going to watch. When price comes into this demand, we're going to watch for what it does. Okay, what it does. Price could just tap into any of these demand zones. I'm actually going to take buys from this point because it's in a discount zone, one, and target. The risk to reward is good. This is 1, 2, 3, which is what I would usually take. But if this fails and it hits my stop loss, I'm going to now target this one at the bottom. Like I'm going to take another trade at this bottom. And this is 1 to 4. So these are the two trades I'll be taking. And then once price comes to this stop, what will I do? Because I can see the bearish structure, right, forming. And we know all of this is just pullback. Once price comes to the stop, I'm now going to take my trade from the stop and target the H4 low, target this area. I could just target this low, right? Because I know price is in a supply zone, so price is bound to start breaking structure and coming downward. So I could just target this low and look that in. Let me see how much that is. That is around 633 pips. So this is what I'll be expecting within the next 2 months. Because this is H4, so it's very likely to happen within the next 2 months. And then from there we'll just keep seeing what price is going to be doing. Right? Let's just see what price is going to be doing and what is going to be happening, across the world. The policies are going to install to know which of the currencies is going to be stronger and all of that. Okay. So this is going to be the end of our broadcast today. I am going to end now and I'll see you guys in the evening. All right. So just do well to share this to your friends. Do well to share this to your family, whoever is interested in learning how to trade the Forex market. I have a Forex course that you could just go through. I think it's less than 6 hours in total recording time. So you could just total watch time hours rather. So you could just go there and just watch the course, get a basic understanding, and then join us on these live streams. And then if you have questions, whenever you come on the live stream, obviously you can ask your questions. Okay. All right. Bye.